Rising demand for socially responsible finance has resulted in new ways of putting capital to work. Mainstream investors have entered the arena and are bringing scale. Between 2010 and 2016, India attracted over 50 active impact investors with more than $5.2 billion worth of investment. Between 2017 to 2018, $11.3 billion has been deployed by private impact investors and development finance institutions in 11 Southeast Asian countries. Although at least 15 impact investors are currently active with $955 million worth of deployed capital in Bangladesh, most of this capital has been provided to commercial banks for lending to SMEs. Despite having a higher GDP at purchasing power parity than most of the Southeast Asian countries, Bangladesh is yet to make its mark on the impact investment landscape. A core reason behind this is the lack of readiness of the pipeline for investments. With funding from UK Aid, Business Finance for the Poor programs managed by Nathan is assisting the private sector to design, test, and roll out business models to de-risk businesses for investors. Light Castle Partners, Syngenta Foundation, and Venture Investment Partners Bangladesh Limited (VIPB) collaborated to launch the Smart Capital project. Focused on agri-businesses in Bangladesh, this project aims to enhance the livelihoods of selected agri-entrepreneurs through a multidimensional approach. Entrepreneurs are groomed through a boot camp, and those having the best potential are selected for seed investment to establish a farmers' hub for selling agricultural input and output. VIPB will be providing the necessary capital in the form of quasi-equity and equity instruments. In the next project, Acacia, SRIM Limited, Bangladesh SME Corporation Limited, and Datasoft System Bangladesh Limited together developed the first impact-focused investment management platform. The Impact MSE platform has an extensive array of features which include screening, investing, monitoring, reporting, and assisting better management of MSME portfolio. Simultaneously, Acacia has set up a fund to invest in MSEs. The Impact Investment Fund is targeting a return of 15 to 20% annually generated from a unique blend of microfinance yields, private equity, and hybrid instruments with a focus to ensure maximum return to investors and the society. This platform also enables the measurement of impact generated through investments made by the fund. The third project, Agribusiness Booster, led by Truvalu Enterprises, is providing complete equity financing to agribusinesses which have the potential to transition into medium or large-scale business from small businesses. Truvalu Enterprises invests in developing the financial and business management capacity of MSEs and consequently shares the ownership stake with owners in exchange for a percentage of the business's future proceeds. So far, Truvalu Enterprises has invested an equivalent amount of 300,000 British pounds in 4 companies. Truvalu Enterprises is responsible for 1/3 of the BDS cost, the rest is shared by the business itself. There are several risks that investors encounter while making an investment. The business models tested under Challenge Fund are mitigating many of them. Preparing MSEs to become investment ready on a purely commercial basis is not sustainable. A blended approach comprising of development and private sector finance is needed to support such companies to reach a critical business stage. This needs to be done before pure commercial transactions become sustainable. The regulators have been instrumental in creating an enabling environment for investors in Bangladesh. As part of the Blended Finance Initiative, a more time-bound fund registration process will promote transparency and informed decision-making by investors in Bangladesh. In mature markets, structured exits from investments are generally done through public listing. Keeping this requirement in mind, the Dhaka Stock Exchange, with support from BFPB, has set up the SME platform in Bangladesh, which will facilitate exits for investors from early-stage companies.